As you already know, Singapore's property and construction market has been down in the past few years due to things like COVID-19 pandemic, high interest rate environment, and cooling measures imposed by the government. That being said, whenever I go to places around Singapore, I still see plenty of construction projects going on, be it the infrastructure upgrades like MRT or that, or new condos being developed. So this prompts me to do more research in this particular space, especially now the interest rates are starting to come down. So in this video, I'm going to cover these property and construction trends and talk about a few stocks in this industry. According to a few articles I've read, the year 2024 ahead is a largely stable one, given that Singapore's economy is still very resilient and existing homeowners don't feel the pressure, to lower their asking prices to transact quickly. Instead, people are moving out of the CBD areas to go for more affordable projects outside the core region, which brings me to the construction trend. As you all know, Singapore is heavily reliant on low-cost foreign labor, for the construction works, and our country has always talked about being at the forefront of sustainable development. On top of that, there's a strong emphasis on efficient construction practices and the incorporation of smart technology through this cycle called Integrated Digital Delivery, IDD. With that in mind, I will put the spotlight on a few property and construction stocks. But before we touch on the stocks, we need to understand that many construction firms have faced financial challenges, especially in the aftermath of the COVID-19 pandemic. So you can see that many of them are trading below 1 times book values and near 52 weeks low as well. But why are they mostly neglected by the investors despite the firm recovery of the property sector? So my guess is that the construction sector is a very dull and boring industry, and not many people talk about these stocks. They usually talk about banks, REITs, blue chip stocks, etc. But that doesn't mean that there are no bargains in this sector. So this is where my video comes in. Okay, first up is Hong Kong Land. It is a property investment and development company that manages most of the iconic and prestigious properties in Hong Kong, Singapore, and China, such as the Landmark, Exchange Square, One Raffles Quay, and the Marina Bay Financial Centre. It is a subsidiary of Jardine Matheson, one of the oldest conglomerates in Asia. One of the investment merits of Hong Kong Land is the stable and recurring rental income from the high-quality portfolio of office and retail properties, which account for about 80% of the total revenue. So these properties, enjoy high occupancy rates and strong tenant demand, especially from the financial, professional, and luxury sectors. But Hong Kong Land's share price has come down a lot in the past 2 to 3 years due to the weak sentiment in China and Hong Kong's economy. In fact, Hong Kong Land now trades only at a 0.2 times price to NAV, way cheaper than the peer average, and the peers like CapitaLand Investment, which trades at 1 times PB, and even City Development, which trades at 0.7 times price to NAV. Okay, so moreover, Hong Kong Land has been buying back the shares aggressively. Constant 22 cents dividend in the past 5 years, we are looking at a potential 6.4% dividend yield, where we get paid, to wait for the recovery. Before we move on to the next point, don't forget to smash the like button and subscribe to my channel. In return, here's a financial meme for you. Next is an interesting stock called BRC Asia, as it is one of the largest steel products manufacturers in Singapore. If you want to build something, you have to get the steel products from them. Alright, so here's a quick video for you to understand the company better.
BRC emphasizes prefabricating a major portion of reinforcement in concrete structures for both in-situ installation and for precast elements, providing versatile prefabricated reinforcement solutions that are tailored to customers' specifications and effectively delivering on a just-in-time basis with a response time of 24 hours or less.
The reason why I chose BRC Asia is because the company has a strong commitment to sustainability, as it supports the Singapore's Green Plan 2030 and adopts all those green and smart features and standards in their products. So BRC Asia order book remains robust at the moment, standing at 1.3 billion Sing dollars as at end 2023. Okay, it remains a strong proxy for Singapore's construction sector given the lion's market share domestically. The third on our list is a small cap stock called Tenging Holdings. It is a construction company in Singapore with a track record of 60 years. Okay, what caught my attention is the recent intention of the company to sell their leasehold property located at 510 Thomson Road for $10 million. Given that the company's market cap is only around 27 to 28 million, they are basically getting 30% of that cash back. On top of that, they have finished their loss-making past projects from COVID. This made them lose money, and things are starting to turn around again as they continue to reduce their losses and get new orders which are more profitable in the future. Lastly, we have crane operator Tongun, not to be mistaken with the previous stock Tenging, right? This company has a fleet of cranes that it rents or trades with customers. The company made headlines when it announced a strategic tie-up with a Thailand company called BRC Asia. The CEO, Mr. Michael Ang, is very excited and said, "This is yet another chapter in the group's growth story in the right direction. We will be positioned to deliver a higher suite of exceptional services to our customers." And most of the analysts are actually positive on the company and gave target prices of above 80 cents, which implies a potential upside of 70% versus the current share price of around 47 cents. Singapore's property and construction sector is well positioned for stability and expansion after the COVID pandemic. But it seems that not many investors are willing to catch up to this neglected space yet. What about you? Will you be interested in buying this kind of neglected stocks from this sector? Let me know in the comments down below, and also help me to smash the like button. Don't forget to subscribe to my channel and hit the notification bell for more such stock analysis and updates. Next up, if you have the time, you can also watch this video over here where I talk about the 5 cheap dividend stocks. As always, remember to do your own due diligence. Thanks for watching, and I'll see you next time. Bye.